Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. If you like making money, if you like learning about financial education, learning about investments, commodities, whatever it might be, this channel's for you. Subscribe to the channel. Give me a thumb up for the content. I'm going to be reading some questions, going through some comments. I'll just make some general comments here about the overall market. We had a very big, everything kind of sold off today. And we had a reversal in a lot of companies where they leave these big wicks on the bottom. Typically, when you have a big wick on the bottom, a wick is you've got the candlestick body, and then throughout the day it trades down, reverses hard, and then comes back up. Typically, the reversal of that wick means that it's probably going to go to the upside. Some of these, they do have some momentum to the downside. So typically what I like to do, even though there's a reversal day, I like buying into strength. I don't like buying into weakness. Momentum's to the downside, even though we have that reversal candlestick. We may have another small down day. I want to see the candlestick body lengths contract down where the buyers start to equal the sellers. It's very volatile right now. So I typically stay to the sidelines when you have a lot of volatility. I like to see when things kind of contract down where the buyers start equaling the sellers, and that's when I typically like to add to positions or buy. I call it the dead periods. I don't like trying to jump in and out when it's super volatile, although you can catch some very nice moves potentially, especially in some of these very volatile stocks that we hold, like SM Energy absolutely moonshotted after its earnings. They reported earnings, it went down 21%, and then it shot up the couple of days after the earnings. But I like for calm periods, not the volatility. And again, I've got some money. I'm adding a little bit here and there if a company looks really good. But I've been kind of just sitting here waiting for the volatility to die down. And then I'll see where everything kind of lies. And then I'll go after the cheap companies that I really like. So here's a question. He says, I could be wrong, but I sense a lot of people in this group are much more weighted in stocks and not so much the precious metals, the physical precious metals, including me. I only have 5% precious metals currently. I'm wondering if it's still just seen as mostly bought to protect wealth and not the same capacity to grow wealth compared to leveraged mining stocks. But what you said about rhodium's meteoric rise and the potential for undervalued precious metals like platinum and ratio investing seems pretty compelling in terms of asymmetric gains with less risk than stocks. It's a win-win. So I'm going to go over my portfolio in a couple of videos later because I know I have a lot of new subscribers. I want to continue to drive home what I do. And you guys can take it for whatever. You don't have to follow it. But I'm going to continue to tell you what I do and what has worked for me over the years. Pertaining to that question, I am trying to work towards a 33% physical precious metals holding of my entire net worth. You are probably going to ask, well, why the heck would someone do that? Why would someone do that? And what you have there is exactly why I do it. It's a way where I can get 12 times my money on the last previous bull market was silver's return. If you knew what you were doing, you could swap at the top to something like palladium. Palladium basically goes opposite of platinum, silver, and gold. Rhodium's on its own thing. That's completely different, which is good because you can use that as another one. But what I see going forward is we could have debt currency problems. So I am very heavyweight in the physical precious metals out of the system. I don't play their games anymore. It's freedom. It's low risk. Get me out of that dollar. I don't have to transact into or out of dollars anymore. Now, if you can do ratio investing, that's just saying you're taking the cheap metal on a historical basis and swapping it to, you take an expensive metal, swap it to a cheap metal, and you do that over and over and over to increase your ounces of physical precious metals. And that's the whole game. You get wealthier by getting more ounces of physical precious metals, period. Because it's an inflation hedge, so to speak. It's against the gold standard. So right now, I think platinum and silver are the two to own. I think those will do exceptionally well. I will show you in other videos what percentages I hold of everything in my portfolio if you guys are interested. I'll show you everything. I have nothing to hide. Now, on the stock portion, which is, again, roughly 33% of my net worth, and 15 to 20% of that, of the 33%, so a little over half, I would say, maybe about a little over half, maybe 40%, 60% of the 33% is these companies that we always talk about on this channel. There are a lot of the mining companies. And I'm going to show you the breakdown of the percentage that's in that portfolio for everyone in another video, so you can see exactly what I own. You can see what I started with in my cost basis in terms of the percentages when I put the original money in. I'll show you what it is today after these things have appreciated so much. Now, I know we have a lot of volatility. We've been riding things up and down. I'd say the past couple of days have been pretty volatile. We've seen some of these technology companies kind of dive down. We're seeing that in the prices. What I need everyone to focus on is value. Value. Just focus on the value. And I'm going to go over in other videos, I'm going to release them soon, about the opportunities and the sizes of this next bull market in some of these commodities. I'm going to talk about ratio analysis. I'm going to talk about the compression of those ratios and the potential upside of some of these commodities. They are far larger. The ratios went to the downside, to the cheap side, much more skewed this time because of COVID than any time in history, which means that this is a greater opportunity than any time in history. And to have that opportunity, I think we need to focus our once you understand value, and if you play this once in your life and you understand it, it becomes super easy. And what I mean by that is when you know that a ratio is cheap and you understand that how jacked up the value's been, it's gone so far to the downside that you can buy these things and just accumulate. This is like, it's kind of like collecting something. Let's say you're collecting shells or something, and you store them in a basement or something like that. And you're finding all these cool shells, but you can't just find all of them at one time. You have to go out and look, and then you find something, you're like, wow, this one's really cool. So then you bring it back and you store it, and you find another thing, and you keep looking over time. That's the same way investing is. You wait until the value gets super cheap. Nothing is going to be cheap at the same time. You can't have everything be cheap at the same time. You find some things that are cheap, you put it in your portfolio. You find another one that's cheap, you put it in the portfolio, and you say, hey, look, this thing's been cheap for a little while. I'll keep adding to it because it's so cheap. And then one time you're going to find something and you're going to say, I've never seen this cheap in my history of my life. That is when you know you got to load up. So you load up, you put it as much as you buy it as much as you can because you've seen it in history before. What I've seen in history before with the ratio investing is that you see these things, and with physical precious metals, you have zero risk of default. There's zero risk of bankruptcy. Some of these companies can go bankrupt, and that's why I put so few money into some of them in relationship to my overall net worth. So I really load up on the physical precious metals because there's zero risk. There's zero bankruptcy risk. Nothing can really happen if you buy the physical metals. And platinum, the ratio was literally 1 ounce. I should say this, 1 ounce of gold could buy more than 2 ounces of platinum. That's never happened in history, I don't think. If you look at the rarity of platinum, it is like uber rare. There's no inventory of it. If they have a problem with platinum, that price will go vertical. There's just no inventory of it. There's nothing to absorb a problem. And a lot of it is mined in South Africa. 80% of it. Something happens there, it's like price goes vertical. And we want to use this stuff more and more and more in a lot of these fuel cells, green technologies. It's used at a 5%, roughly, it's 4.8% increasing use on everything else that it's used in the world, platinum that is. They're using it in all these different technologies and in humans, all that stuff, 4.8% increase. And when fuel cells come on, I don't know how they're going to get the metal. They're going to drastically overwhelm the supply of platinum. So I see those opportunities when you've got a mining cost, the high cost producers at $1,200 in platinum, and you can buy it for $700 at the March lows. That blew my mind. I was like, this is the biggest opportunity I've ever seen. And I just, you jump on it. I think that same opportunity is happening right now. It happened in oil. Oil went negative. We're going to have a massive problem in oil, I think, a year or two from now. We could see $100, $200 oil easy. And the reason I say that is because COVID screwed up the entire supply of it by shutting down the economy. And that screwed up the supply. When demand comes back, it could even come back as soon as this summer. I think we could see a big spike. I think we could get over $100 this year even. Maybe. I don't know. It's possible. But it all depends on demand. I don't have all the answers. I'm just guessing. Now, if I can buy something that's never been this cheap on a historical basis ratio, when oil's at 50, 60, 70 barrels to 1 ounce of gold, I'm going, give it to me. This is free. Sure. And then I'll have to speculate. I'll risk some money in some of these high debt companies, which hopefully don't go bankrupt at the bottom, and they didn't. And you're going to make a lot of money. A lot of money. A lot of money. Because I've never seen that ratio be that cheap. So what I'm trying to get at is, I know you guys are looking at these prices, and they're probably spooking you a little bit, if the volatility that is. Look at the ratios. Look at the value. And if you guys are interested in physical precious metals, there's zero risk of default on that. You can go and buy it at the low of the lows with zero problem. That is one thing that I've done, and I've made money very much so on all of those purchases. I did it on silver, I did it on platinum, and that's why understanding those cost curves in the videos that I've released earlier are so important. Because if you know what the miners are and what it costs to bring out of the ground, you can't lose money buying under those cost curves. All you have to do is load up and just hold on. Uranium at 60 to 1, 60 pounds to 1 ounce of gold is a steal and a half. I'll show you in other videos the compression of ratios and what these potential returns could be in some of these sectors, it's going to be enormous. At least that's what I think. These are all projections. They're not for sures. They are projections of possible things. I will show that in other videos. And if you focus on that value and you focus on the sectors that are out there, and you know that the market conditions are changing, we know that we're going to have a commodity bull market coming, and you're convinced of it. And remember, this is financial education, not advice. But if you're convinced that we have a bull market, this is the time that you want to just continue to cost average in. You want to see lower prices. You should be excited about lower prices, not afraid. Because lower prices means that you can get assets even cheaper. And if the bull market's coming, if we have those deficits that we see out in the future, if you look at my videos and you see those deficits, that should give you the confidence. It's just a matter of time then. You got to be patient, and you pick your companies. Be strategic with the companies. Pick good companies. Have some that don't have a lot of debt. Have some that have debt. Spread it out. If you've got some really good opportunities, maybe overweight those ones that you like the management team, or the ones that you like the assets, or both. If they have good assets and good management, overweight them. Put a little bit more in that. Give it an extra $1,000 or $200 or whatever amount gives you that little extra push. Maybe it's 10 grand for some people. So I just wanted to respond. I know we had some downs. The market, again, we've got the wicks on the bottom, reverses coming up. We've got a lot of momentum coming to the downside. I want to see what happens this next couple of days or two. I'll do the charts coming up, technical analysis to help you guys out. I'll even maybe do the hypothetical portfolio. You're going to see a lot of videos released on my portfolio, what the allocations are. Then I'm going to show you what the allocations are in those groupings. So if it's physical precious metals, equities, and real estate, I'll break up the equities portion and my physical precious metals holdings and show you everything of what I own. I have nothing to hide. So you can see exactly what I own, why I hold it, what the ratios are, all that stuff. And I can explain when I bought it, why I was buying it, and my entire mindset of doing it. And I don't think I've lost on a physical metals purchase. And what I mean by that is I'm going to buy it when it's cheap. I'm going to continue to cost average in, and I'll be buying it for years if the ratios are cheap. And I think it's going to be of greater and greater value in the future. Silver's the number 2 commodity in the world. Oil's number 1. That in terms of its uses. Platinum is so dang cheap and rare that I had to pick it up. It was like they're just giving it away in relationship to history, the ratios that is. Keep leaving comments below, guys. Keep leaving it. Let me know how I'm doing. Put some comments below. Let me know what you want to learn. Keep asking questions. That's the way that people develop and learn. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't. And I appreciate you guys listening. Thank you. This is Finding Value.